a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Well, let's see how bond and gold ETFs are faring out in the wake of the big Brexit shocker. Our ETF research director, Nina Mishra, has the lowdown for us, and she joins me now. So, gold and bond, treasury bond ETFs surged. Was it right after Brexit that they surged, or had they been creeping higher before?
They have been doing well this year because there is already a lot of uncertainty in the market. And this vote just added a lot of uncertainty to it. And I think it was a shocker to the market. The market was caught flat-footed after the outcome because, as you know, earlier last week, sterling and stocks had surged nicely on hopes of a Remain vote. But after the outcome of the vote was known, the pound got pounded to a 31-year low, and stocks plunged because the market was not prepared for the outcome. And jittery investors, they piled into these safe haven assets, including treasury bond, gold, yen. So obviously they surged after the outcome. Now, the 10-year yield is now very close to 1.38% record low, which was touched in July 2012. And gold at one point saw its biggest spike since the financial crisis of 2008. It is now at a 2-year high.
Wow.
And in fact, on this slide, I have the comparative year-to-date performance of the S&P 500 ETF with two popular long-term government bond ETFs, iShares government bond ETF with the ticker TLT, and the Vanguard long-term government bond ETF with the ticker VGLT, and two most popular gold ETFs, Spider Gold ETF GLD, and iShares Gold ETF with the ticker IAU. So as you can see from this chart, treasury bond ETFs are up about 15% this year, and gold is up about 24%, whereas the stock market S&P 500 index is almost flat for the year.
That's interesting.
So I think
can this continue?
Yeah, we'll discuss this, but I just wanted to add that one of the important takeaways from this chart, performance chart, and this referendum is that markets can be unpredictable.
Oh, true.
Yeah. So investors should be prepared for all kinds of market scenarios. And the easiest way to prepare your portfolios for all kinds of outcomes is to have diversification in your portfolio. And we have talked about benefits of having diversified portfolios in our videos so many times and in our articles as well. So this just shows that how important it is to have some exposure to equities, some exposure to bonds, some exposure to commodities and precious metals, and some international exposure as well.
Okay. So back to can this continue?
So as I said, that there was already a lot of uncertainty, and the vote has just added more uncertainty.
Right.
So I think we are in for a prolonged period of uncertainty, global macroeconomic uncertainty, and political uncertainty in the US and elsewhere. So this prolonged period of uncertainty will be good for both these asset classes, government bonds and gold. Then one of the other fallouts of this vote is that the Fed is going to stay on hold for quite some time now. In fact, they may not raise at all this year, a rate hike.
Because of this?
Because of the uncertainty now. So probably they'll be on hold this year and may raise only next year. So lower for longer rates are good for both bonds and gold. And while the treasury bond yields are so low in the US, they are very attractive compared to government bond yields in other parts of the world.
Really?
So on this chart, I have 10-year sovereign bond yields in major countries around the world, and you can see that Only Australia, New Zealand, Portugal, and Greece have yields higher than the US government bonds, which is very surprising because US government debt is considered the safest in the world. And with yields so attractive now compared to others, foreign investors find US Treasury bonds very, very attractive. In fact, foreign demand, both institutional and retail demand for US Treasuries is at record high now. And these negative and low rates also boost the appeal of gold. So I think these two asset classes can continue to do well. That said, because of the rapid rise of late, particularly after Brexit, I will not be surprised to see some sell-off if market conditions stabilize. But I think those should be used as opportunities by investors to add some exposure to these asset classes, buy some bonds and buy some gold, and make your portfolio more diversified if you have an equity-focused portfolio, because I believe that downside is going to be limited.
Okay, well, thank you for that, and I'm sure you're going to be watching this going forward to see how this all shakes out and bring us any new developments.
Sure.
All right, you can find out more about ETFs. You can get some ETF picks, ETF commentary, all on our website, Zacks.com. All you have to do is go to the homepage, use the Funds tab in the top toolbar, and it'll prompt you to go to that section of Zacks.com. Meanwhile, with Nina, I'm Terry Ruffalo.